Hi, I'm making this chart for a friend of mine and doing an analysis on this stock. I am not a financial advisor and I do not give trading advice. I can only say that what I would do in this particular situation. She asked me about AEP, which is very interesting because it looks like I must have been looking at this stock at one point. And as you can see, it's dropped quite a bit from the time that I was looking at it. I'm going to remove this and take a look here. One of the things that I notice about this stock is that it has a sloping down 200-day moving average. So the trend is down. Now, the trend of the overall market is down. We're in a bear market, so we have to be very careful when we go long on a stock in a bear market. Then again, you have to be ready because a bear market could turn at any moment. Now, the second thing, I am a stage analysis trader, and I'm always looking for stocks in a stage two uptrend. One of the things that is a good stage two uptrend indicator is that your moving averages are stacked up in the right order. And that would mean that this 50-day would be above the 200-day, and certainly your 10-day and your 20-day would be trending above the 200-day moving average. And in the case of the stock, that's not the case. The other thing that I look at is how much overhead resistance does this stock have? First of all, it has overhead resistance where I've drawn this line, and it also has overhead resistance where I've drawn that line. And why is that important? That's important because you have trap buyers, and you also have buyers that maybe bought it down here and they're going to take profits right about here. So, which would cause this stock to possibly go up and then go down. Now, once again, I could be very wrong about all of this. This stock could blow through this resistance and just keep on going. And it could even happen today because today is an earnings day. Now that brings me to another point. If I don't already have profits, if I'm not already sitting on a lot of profits going into earnings, I'm not going to buy a stock going into earnings or on an earnings day before earnings are announced, because this thing could really tank. Now, it could also blow through all of this area. So that's a chance that you have to take. Another thing that I look at when I'm trying to make a decision about a stock is I go to IBD and I look at the composite rating and the relative strength. Now, this has a very poor composite rating and a very poor relative strength rating. I like to see my relative strength over 85 and preferably up in the higher 90s. Now, the relative strength line is pointing upward, which is a good sign, but it's still 64 and it would not meet my criteria. And also, the composite rating is 58. So that would not meet my criteria either. Now, what I like about investors or IBD Digital, and I think my subscription is about $30 a month on this. What I like is that it will tell me what is ranked highest in this group. Now, this is Carlisle, and Carlisle Enterprises, I think it is, has been doing quite well. So, and it's had a pullback, but the relative strength is 94. Everything's trending upward. So, and the composite rating is 99. So, of those two stocks, I would be more likely to buy Carlisle. But I could be all wet here, and I could be totally wrong. The third thing I would look at when I'm looking at a stock is keeping in mind the group strength. And I like to go to Finviz and look at group strength. And I just go to Finviz, groups, and then I go to charts, and I can scroll down to the industrials, which this is in the industrials. And I can see that the 50-day moving average is pointing downward. The price is moving downward, or the overall prices in the industrials are moving downward, trending downward. And then it's 11% below the 50-day moving average. Sorry if I'm moving my mouse too much here, but anyway, so my opinion is I would not personally be buying the stock. But then again, anything could happen. And I think I didn't mention that not only does it have earnings coming up, but a few days out from earnings, I think it might be on the 19th. Let me go and look. I can go into my Thinkorswim platform and I can look right here and see that uh, the dividend is going to pay on the 19th, and it pays a $2 dividend. So this stock is going to drop by $2 on the 19th, but she will also, because she's in before the 19th, she would also get a $2 dividend. So that's something to take into consideration. But for my opinion, this would not be a stock that I would personally buy. And once again, this is just my opinion, and you know what they say about opinions.